Good day. Today, the government released the GDP data for the second quarter and for the first half year. And those numbers, the headline numbers, look very, very disappointing. So I thought I will give you my take on it and what I expect the impact on the markets will be. So first of all, yes, these numbers were very disappointing because even though everybody was aware that these numbers are not going to be good, they came out even lower than most of the economists had predicted, right? Now, naturally, that looks very disappointing. You would have seen the numbers in the press of the numbers of 6.2 and 5.5 for the half year and for the quarter compared to the last year, they're very much down, right? So first of all, let's understand this, right? So from the economy perspective, right, if you then break up this number and look at it, where is the weakness coming from? It's coming majorly from one or two sectors, which is the manufacturing and the mining sector, right? Otherwise, if you look at it, private consumption is up compared to the same quarter last year. Government consumption is up compared to the same quarter earlier year, right? So the problem arises then from the fact that manufacturing and mining are related to capex activity, which comes both from the government and from the private sector, right? So from that number, when you see that government has apparently spent only 40% of its projected capex for the current year in the first half, right? So that less expenditure by the government, and the fact that though government consumption has picked up second quarter, in the first quarter because of the national election and the Maharashtra election, those effects were there in government spending being less. These are the numbers which have led to the slowdown in the GDP growth. Now, if looking forward then, right, from an economy perspective, will this bad news continue over the next two quarters? That's what I'd like to spend a few minutes in analyzing. So first of all, leading off from this 40% that the government, why has the government spent only 40%? First, the elections related activity diverted their attention, that's one. But more importantly, my sense is that if you look at it from a fiscal deficit perspective, the government has spent only 46.5% of the full year fiscal deficit in the first half, which means there's still 53.5% of the fiscal deficit to be done in the second half, which means there will be a rear loading as opposed to front loading of the capex expenditure that will happen, and anyway the government would like to use. Why is the government not spent that money is another reason for it, is that unless the government is sure that the revenue numbers are coming in well, they would not like to spend. And then the revenue, the income tax, the corporate tax, if those numbers don't come, they don't come well, then the government will breach the fiscal deficit discipline, which is a very bad thing because India is dependent on foreign capital, on foreign rating agencies for a good rating, and hence primary importance by the government is on maintaining the fiscal deficit path which they had expressed, right? So they are being prudent about making sure that the revenue numbers come up to spend in the second half. Now, are those revenue numbers now coming up so that the second half, the 60% of capex, you can expect to be spent? Yes. What is the clues there? We have seen the income tax collections come in ahead. We've seen corporate income tax also come in ahead. And the GST number in October has touched 1.87 lakh crore, which is the second highest ever since October 2017 when the new GST computation started. So, which means that now the revenue side is looking comfortable, so the government will have the confidence to go and spend. So I think that government capex expenditure as it happens will then lead to the GDP impact as a multiplier impact. That's one reason to be positive over there. Second thing is that the first half of the year, the festival season was not fully reflected. Diwali happened in end of October. So then for the second half to project well, what are the clues we look at? So first is that agriculture, right, which is shown a positive even in the first half at 3.5% growth compared to negative growth or very low growth 0.2 to 0.4% growth earlier. So the revival of agriculture with a good monsoon happening should play out over the next few months in contributing to GDP growth. That's one. Second is the construction sector already has, even in this slow growth period, construction sector has grown at 7.7%. The house price index overall India has grown by 4%. So I think construction will continue to support the GDP growth. The third is from the consumption of the discretionary consumption, right? What is that? That is the automobile and the real estate. Real estate we just spoke about. I expect that to continue. But what about the auto sector? The auto sector numbers were disappointing in the quarter ended. Many people know that. But October's numbers are mind-boggling because we had a 32% increase in passenger vehicle sales and a 36% increase in two-wheeler sales in the month of October. which means that the Diwali effect really came through, right? So naturally those numbers will now play out in the second quarter GDP. What else is a clue for the future GDP? Those of you who have attended my webinars in the past or physical meetings will know the best predictor of GDP is an index called the Purchase Manager Index, which is PMI. Now the October manufacturing PMI came at 57.5, higher than September of 56.5. The October services PMI has come at 58.5, almost 1% higher than the 57.5 of the previous month. So both the PMIs are on a rising trend, are well above 50, which is the best indicator of a coming GDP good numbers to come through. What other clues are there in terms of the recovery in the economy, right? I will say that exports in the month of October have grown 25% compared to a 6% growth in the month of September. Where has it come from? Obviously from electronics, it's come from chemicals, it's come from engineering goods, and from ready-made garments, where I think we are getting the benefit of Bangladesh's troubles. So again, and a good export story will again pan out in the next quarter, right? So on all these factors put together, I do believe that the future GDP number, and there's one reason why Mr. Shaktikanta Das has refused to lower his 7.2%. Maybe this time when he comes in December 6th, he might lower it. But so far he has been steadfast, despite the slowdown number, to say that we will recover. So maybe he expects a very strong bounce in the second half. He may revise it down a little, but definitely, I would say that in terms of the quarter-on-quarter GDP, this last quarter was probably a bottom, and we will only see an improving GDP in the coming months, right? So, having summarized this economic outlook, I think I've said everything that I wanted to say about the future. Just a couple of more points which I remembered. Domestic air passenger traffic up 9.6%, right? And also petrol consumption is up 8% from September 3%, and air passenger traffic, which I mentioned, is 9.6% in October compared to 6.4% in September. And rail freight also has turned 1.5% positive from just 0.2% in the previous month. And the IIP, which is the October data has not yet come out, but the September data is already showing that compared to August being negative, it is positive 3%. So lots of these high frequency short-term indicators are showing a rising uptrend. So I see no reason. Why do I harp so much on this is that, yes, the market may react tomorrow because these numbers are there, and some people may say and there will be panic selling. But soon the market will reach itself, because the market is a forward-looking animal. That's why they call the markets a lead indicator. When I say that, that's why if you see the market's correction has already happened based on the earnings guidances which came in lower, and the actual numbers has already factored in this low GDP number. So from now on, when this new news gets factored in, all of this will reflect from January 10th onwards, the quarterly earnings of the companies which come out, and the market will revise the earnings forecast for these companies and sectors in the future. So I believe the market is a forward-looking, and even if there is a temporary reaction to this in the stock market, I believe the market will bounce back. Purely for this perspective, there will not be correction. Volatility may come from other FII factors, external factors to India, that's something else. But this GDP data alone, I do not believe either is going to lead to a huge negative reaction. It's a negative, the market will quickly cover it and look forward in the future. And from an investment policy perspective, from each of our investors, I don't think any change is required. The fund managers will do the reallocation based on intersectoral things. So as far as investors are concerned, they should stick to their asset allocation that's already firmed up, spread it across the crypto, spread it across the sectors, keep diversification in their mind. And I don't think any panic which is resulting from these GDP data being published this evening for the Monday markets should be an opportunity to buy in good quality companies which are focused on the India story, right? So with those few words, I wanted to give you my quick take on the GDP data coming, because there's going to be a lot of noise and over the weekend. So I thought I would give you my 2 bits so that you can use this in your asset allocation. Thank you very, very much.